Good morning, everybody, and welcome back to Morning Markets, where the team at True Potential discuss the key events from the past 24 hours and how they impact asset markets. Today, we'll look at some economic data from the US and also from Asia. Looking back at markets yesterday, what did we see? We saw the performance on Monday was, I suppose, reversed in the equity market, with those sectors that had provided some leadership to the market, financials, energy, some of the airline names, etc. The stronger performers on Monday, that reversed yesterday. And again, this just speaks to lack of direction in the overall equity market at this point in time, as we balance up a number of the competing priorities or decision points that are out there around COVID-19, rising infection rates. What does that mean for economic growth? Are there implications for policy, particularly if we think about further fiscal support? We've seen some in the UK, we've seen the challenges in the US. We've also got a little bit of a challenge in Europe as well at this point in time around moving forward with the fiscal and the budgetary programmes that we've discussed over the past couple of months. So those factors coming together, I suppose, and providing little direction for markets, with ironically the number of the major markets, Euro Stoxx 600, FTSE 100, S&P 500 all down about 50 basis points yesterday. The more growth orientated Nasdaq down about 30 bips on the day. Turning to other asset markets yesterday, bit of weakness in the oil market, where we saw oil fall about 3.6% on the day, coming back below that $40 a barrel level. Just a number of people discussing the challenges from a supply and demand perspective and how that will have implications for the medium to longer term supply-demand balance within the oil market. So that sentiment that we discussed a number of months ago continues to be really evident within the oil market. Saw a better performance from precious metals yesterday, with both gold and silver gaining over the course of the day. Currency markets, a little bit of change at the margin, but nothing to really report. And very similar dynamics within the sovereign bond market. US 10-year yielding 65, UK 10-year gilt at 18 basis points on the day. Turning to some of that economic data, and it does speak to this mixed picture that we're getting at this point in time, particularly if we look at two key things from the US yesterday. One, the Case-Shiller house price index, which looks at the house prices in 20 major cities in the US, and it continued with its positive trend that we've seen over the past couple of months, rising 3.9% on the year. The housing market has been one of the really bright spots of the US economy over the past couple of months, supported by low interest rates, which are in turn supporting low mortgage rates, but also some changes within the mix of housing, moving some indications of movement out of cities into bigger areas and more spacious properties, etc. So we've seen those areas that offer that having more significant house price increases than the likes of New York or Boston at this point in time. The other good indicator that we got from the US yesterday was consumer confidence, which continued to improve quite significantly indeed, coming in at an index level at 101 versus 86 last month, with a large proportion of the improvement coming to expectations about future developments, including future developments around employment. So that's encouraging from a consumer spending point of view and a consumer activity point of view, and does make one question the importance of the fiscal stimulus that's being discussed. Clearly it's important to the market. I think it probably is implicitly important to the consumers and forms part of their thinking, and we'll just continue to see how that evolves going forward. The other economic data points that I wanted to touch on this morning centre around Asia, and in particular the Purchasing Managers Index for September that we have from China, both manufacturing and services. In terms of what we've seen there, we saw an improvement in the services side to a reading of 55.9. Remember, in the PMI, a reading above 50 indicates expansion, and that's a continued improvement in the services side, and services has been lagging what we've been seeing in the manufacturing sector. So it's encouraging to see that pick up as social distancing and other restrictions have been eased. We've started to see activity continue to improve in China, albeit at a slower pace, and it maybe gives us an indication to think about how improvements will come and will be seen in developed markets and in Western markets over the coming months as we move through the current challenges. Other things in Asia, we saw Japan industrial production continuing to improve month on month, the third month of improvement. Again, that's a positive, albeit the improvement isn't maybe as strong as we've seen in other manufacturing economies, but it is still improvement nonetheless. I'll leave it there for today, and please join us again tomorrow and do subscribe on the YouTube channel. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.